Hello, Matthew Bell with InsurancePrescription.com. Today I'd like to talk a little bit about guaranteed issue insurance. Guaranteed issue life insurance is essentially life insurance that you are not going to be declined for. Now, when you think about life insurance, there's private life insurance and then there is group life insurance. Group life insurance is going to be that kind that you would have access to through your place of employment usually, or through some sort of association. Now, group life insurance is unique because if you enroll during the open enrollment period, there's usually no medical underwriting for group life insurance either. The problem with group life insurance is that it isn't portable, number one, which means that if your employment ties get severed, your group life insurance goes away. Now, I'm not going to get too in-depth into group life insurance in this video. Suffice it to say that when I'm talking in this video about guaranteed issue life insurance, I'm going to be talking about private life insurance that you will have access to that also won't have medical underwriting, which is a kind of a unique feature. So even though group doesn't have medical underwriting, I'm not considering group term to be guaranteed issue life insurance for the purpose of this video. Now, I should say that I am not a financial advisor. This is not to be construed as financial advice. I'm not giving you insurance advice. Even though I am licensed to sell life insurance, I am not giving you a personal recommendation. I'm going to describe the way this class of products works, and I'm going to describe who might want to take advantage of something like this. Now, the best way of understanding what guaranteed issue life insurance is to contrast it against life insurance that's not guaranteed issue. In a normal procedure for obtaining private life insurance, you're going to express interest in a policy by applying for it. So whether you seek this out or whether somebody approaches you, you write an application, and you basically in that application are going to disclose certain facts about yourself, things that are going to enable the company to get a fix on who you are, obviously, name, date of birth, social security number, address, and the like of that. You're also going generally to make a declaration of your insurability. This is going to be a statement of health. You're going to disclose medications that you're taking, maybe surgical procedures you've had, conditions you've been diagnosed with, and so on. When the underwriters then, in the second step, after the application is submitted, the insurance company is going to assess your application and they're going to get a fix on your insurability. They're going to gauge your risk level. The company is going to perhaps send somebody to do a medical examination. They may want access to medical records. If a paramedical is required, that might involve giving a urine specimen or a blood specimen. You might have to take an EKG. You might have to do a stress test, chest x-ray. There's any number of different aspects to medical underwriting, depending on a number of things. One will be your age, and another is going to be the level of coverage that you're seeking to obtain. If you're trying to get approval for a $10,000 burial policy, the level of scrutiny might be down here. If you're trying to obtain a $10 million death payout for the purposes of a cross-purchase business agreement, the life insurance company is likely going to apply a greater degree of scrutiny on that application than they would for the burial policy. Now, with private coverage, the medical underwriting matters. Once the underwriters assess your insurability medically, they will probably also assess your insurability from the standpoint of financial risk, from the standpoint of driving record, and other things that would go into helping them to build what you might refer to as a risk profile. Once the underwriters of whatever insurance company it is have finished their evaluation, then they are either going to accept or decline you as a risk. If they decline you, you have the opportunity to request the information as to why they made that decision and on what basis they formed that opinion. So you can request the records that they used. Of course, if they're making that on the basis of medical records, you can obtain those from your doctor. But any other records the insurance company has to provide to you if you request them. They may also provide you with a letter summarizing their results or their findings. If they accept you as a risk, then they're going to make you an offer. Accepting you as a risk, they're going to fit you into some sort of a ratings classification. You may be considered a standard risk. You might be considered a preferred risk if your health is exceptional. And you might be considered a substandard risk, depending on your health and other factors. But the offer that they make will let you know what your risk classification is, and then you will be given the option to accept or to decline the offer. The offer is going to include what premium amount and what death benefit you've been approved for, and again, you can accept that offer or decline it. If you accept the offer, then the insurance policy will go into effect. If you decline the offer, then the insurance policy will not go into effect. Now that's the normal procedure. But in some cases, people have health conditions that are extremely serious. People may be declined for coverage, or they may not even attempt to apply because of the severity of their health concerns. For example, if they've been diagnosed with a terminal illness, they've been diagnosed with cancer within a certain period of time, or some other ailment, it may be the case that their health is risky to such a degree that the insurance company is not likely to take them on. Some companies provide what are called guaranteed issue policies. A guaranteed issue policy is one that, you heard it right, you will not be declined for. Now I should give not so much a caveat, but an understanding here that certain policies have eligibility requirements, and the eligibility requirements should not be confused with the underwriting standards. So eligibility requirements may be, for example, people of a certain age bracket. So let's say a particular policy is offered and available to 18 to 80-year-olds. Well, if a 16-year-old applies for that policy, he or she is ineligible. Health considerations have nothing to do with it. Driving has nothing to do with it. It's simply that the age bracket that is required for eligibility has not been met. Similarly, if a person is 85 and applies for a policy that is restricted to 18 to 80-year-olds, that person will not be eligible. It's not as if they've been declined, it's just that they're ineligible. Another consideration would be perhaps nation of origin. If somebody is born in another country, they may be ineligible for certain policies. If a person does not belong to a fraternal organization and the fraternal organization is offering insurance, they may be ineligible. Think about the USAA. USAA, even though it's not a fraternal, USAA deals with military personnel, active, past military personnel and their families. If you don't have the requisite tie to the armed forces, then you cannot avail yourself of USAA bank accounts and life insurance and the like of this. So USAA has certain eligibility requirements. The underwriting considerations are altogether different. So if you're eligible for a policy, so again, let's take 18 to 80-year-old, certain policy is available. If you're eligible, then the underwriting comes into consideration. For a guaranteed issue policy, then, we're assuming that the person is eligible. They have the requisite membership tie, they have the requisite professional tie, they have the right age, but then the question is there medical underwriting or not? And if the policy is a guaranteed issue policy, then there is no medical underwriting for a policy like that. In some respects, this is very advantageous. So for instance, if a person does have a terminal illness, they can still obtain insurance coverage, for example, for burial costs. One thing you should realize is with a guaranteed issue policy, the death benefit is likely to be much smaller than what you would obtain with a non-guaranteed issue policy. So you're not going to be able to obtain $1 million guaranteed issue policy, generally speaking. What you're going to have instead is a $5,000 policy or a $15,000 policy. The idea is something to help to offset or defray funeral costs and the like of that. Many guaranteed issue policies are what are called graded death benefit policies. This means that there is usually a period of time, say 1 year, 2 years, 3 years, whatever it might be for the policy, during which, if you want to call it a probation period. During that period of time, if you take out a policy on January the 1st of this year, and a person has a 1-year probationary period, if the person dies within that first year, what happens is the insurance company will refund the premiums that were paid in. The probation period must be served in its entirety before the full death benefit is available. This is what we mean by a graded death benefit. There's levels to how much of the death benefit will be paid out. The full death benefit gets paid out after whatever probationary period is served. This isn't necessarily a bad thing. What happens is they're refunded the premium dollars. Usually there's some sort of an interest rate that's credited on there. If you consider a family with somebody who's terminally ill, even if that person dies within the probationary period, that money that was spent on the policy is like it was put into a savings vehicle, and it will still help to offset the funeral costs more maybe than if that money had been spent just on normal living expenses or on entertainment or on something else. But it is true that if those premiums are refunded, those dollars are not going to go as far as the death benefit would have gone to help with funeral expenses. But the benefit of a graded death benefit or guaranteed issue policy is that if the insured does live past the probationary period, the full death benefit pays out. So let's say there's a probationary period of 1 year, January the 1st, a person takes out the guaranteed issue policy. Let's say they have a terminal illness. Let's say they live for that year and then die in January the following year. The full death benefit would pay out if that policy had a 1-year probationary period. Anytime there's no medical underwriting, you should realize also that the insurance company obviously is assuming that the person who's applying for this policy is otherwise uninsurable. Sometimes they have good evidence for that, namely sometimes a person may have been declined for a policy, then they have the guaranteed death benefit policy written on them. At other times they may simply be approached by someone who is declined in another context or who believes for other reasons that they wouldn't be approved. There have been a few cases maybe where a person might be fearful of the underwriting process. Maybe they're fearful of taking certain medical examinations and they just prefer to avoid it. But one of the things that you should realize is if the insurance company is assuming you're a substandard risk, those policies may not be as favorable from the standpoint of cash growth, from the standpoint of death benefit, as an insurance policy that you might be able to obtain if you are able to get a policy based on your insurability. The best thing would be to consult with an agent in your area if you have access to one. The agent will be able to sort of walk you through the process. Probably will be able to illustrate various policies showing differences between guaranteed issue values and non-guaranteed issue values. But these kind of policies may be ideal for persons who have had a history of cancer of various kinds, prostate cancer, breast cancer, leukemia, other kinds of conditions that might, depending on the prognosis and depending on how long you've had the condition, they might result in you being declined for normal underwriting. So understand that there are options that can be available for people, and it might be worth exploring those options. If you found something of use in this video, I invite you to like it. Please subscribe to the channel. I have other videos with other content, and I have things planned. I thank you for joining me today, and I hope that you can get the coverage that you need.